All right, what's going on, ladies and gentlemen? Welcome back to the channel. All right, so to start it off, we are going to be talking about Netflix. All right, Netflix had subscriber growth above 2 million new users. All right, and that did end up causing QQQ to go up. All right, no, Netflix is not just large enough or a large enough part of the NASDAQ to move it off of a 15% move, such as it was happening yesterday. But what happens? Okay, when Netflix goes, a bunch of sympathy plays go. Okay, we can come over here to Disney. All right, Disney was going. All right, like these are just things that happen, and it's not necessarily just Netflix who's doing it, but it is encouraging market sentiment to go up. Yeah, to go up. All right, and what are algorithms doing when Netflix reports earnings, or when a bunch of these different companies are reporting earnings? The important companies that typically move the market. Well, if Netflix is good, then the market's good. All right. If Netflix is bad, they start immediately selling off the market. That's just how it works. All right. So that did end up causing our rally yesterday. Now let's go back over to one screen here, and we can go over our update because we do only pretty much trade the indices here. I don't trade anything else at this point. I see no purpose in trading anything else in this at this point. When we are making the transition into a bull market, yes, I will be trading other things because, yeah, other stocks are going to be heavily outpacing the indices. But in terms of right now, there's no reason to because everything moves with the indices. So if you're shorting something, you might as well short the indices. All right, so we're going to start off by going over the daily time frame here. All right, we have a long-legged doji here. All right, we have a doji here on SPY. We have a doji here on QQQ, and that is an indecision candle. But I want to point out where they are falling out. All right, where are they holding up? As you see, this candle, all it represents is you started here, buyers pushed you up, sellers pushed you all the way down here, and then buyers pushed you back up here. All right, you are literally sitting right here on your gap fill from yesterday. And yeah, okay, it acted as support earlier today. Now, this is actually what I was watching this morning. You had it acting as support early this morning, and then you had it midday here. You had the break and retest. You retested, you were failing it, and now you're getting back above it. So we're going to have to see what happens here, but in the grand scheme of things, this level is not very important. All right, so doesn't really matter. All right, but I do want to point out that it's pretty cool that QQ and SPY are doing the same exact thing. They're both bouncing, or not bouncing. They're trying to hold their gap fills. This is like the important level of the day are these gap fills. So, I mean, it's important for intraday traders, but again, in the grand scheme of things, it's not going to be mattering. But I'm keeping it up until we end up coming back down here, just because it is acting as a level. All right. But yeah, we have a doji candlestick on both of them with our oscillators hinged downwards. But again, the daily oscillators have been hella bipolar recently. They have not been the most reliable, but at the end of the day, it is, in my opinion, it's the third most important time frame. All right. And for projecting intraday price action, all right, this is going to be your bread and butter. All right. Recently, I've been finding the 1 hour and 4 hour to be more accurate, but again, I mean, we go over all factors on the table here, all time frames that we look at. So yeah, okay. So we have the CCI hinging down. You have a stochastic cross. Is it crossing down at this point? Yes, it is. It's making a cross downward. You have your RSI hinging and going flat. All right. Whereas on SPY, you have the same exact thing. I will say you continuously have you just really don't have a clear trend. All right, that is what's continuously going on here. You have this declining volume as you're rising, but now this is a down day, so I don't really know how I want to look at it. So we're just not going to include that in today's analysis. The volume, in my opinion, does not mean much at the current point in time, since you're at a standstill. Okay, bulls and bears, they've been fighting. All right, but at the same time, this is dealers, guys. This is, I mentioned in yesterday's video, the reason we're seeing candles like this is because dealers are just like continuously wiping out people's premiums. Like both sides' premiums in the same day are being wiped out here, which is something you just normally don't see. All right. You gap down here, boom. All right. Anybody with a strangle likely would have cut the calls right at open and then held the puts because bad data. And you think, okay, we're about to go down 5% again, like we did last time we had a bad CPI report. Well, wrong. All right. Dealers shoved you up all day, or they got squeezed and they had to chase the underlying. And Yeah, and that's just twice as many factors just shoving you straight upward. All right. But yeah, I mean, anybody who like, okay, your calls got demolished right at open. Your calls are demolished. So you're like, oh, I don't want to lose anymore. You cut and you hold the puts. And then all day, the puts get absolutely reamed. And then what happens the next day? A bull trap comes up. Okay. So now you have a slight gap up. People are like, oh, we're continuing. Boom. Anybody who bought calls now is like getting absolutely crapped on. All right. So now those premiums are going away. And now you're like, oh, this day was a fake out because of this day. So you buy puts. All right. And then boom, gap up. You wipe out like most of those put premiums right there that were purchased right at close. All right. And then what happens the next day? Boom, you gap up again. All right. You gap up again. All right. And what happens? All right. You're like, this is a bullish looking candle, guys. There's no denying it. That was a hangman / hammer candlestick. And boom, what happens the next day? You gap down. All right. Like, there are so many traps being set that, I mean, guys, it's very easy to tell who's running this market. It's the dealers. The dealers, they run the market normally, but this is on overtime. They are running people's pockets. All right, so be careful out there. I'm really only looking for the swing trades. All right, the intraday trading, I have been doing a little bit of that on the October 31st puts, but on the 260s. But I'm just saying, guys, I mean, it's crazy out there. All right, it's crazy out there, so be careful. All right, so moving on, let's go over the VIX daily time frame right here. All right, you again, well, actually, I think that is a shooting star candlestick. Let's just open that up right now, thepatternsight.com. All right, we're over here. No, we don't even need to do that. Let me go like that, and then we'll go back, and then we'll go candlesticks, and then we look at the visual index. All right, and now we just matched it up with this. All right, and I think this is the shooting star. I just want to make sure before I am giving out a thing there. Where's the shooting star? Or it's a spinning top. No, it's not a spinning top. Okay, I guess it is pretty similar to the shooting star, or it is a, what is it, the gravestone doji? Doji gravestone. Right there. All right, I would say it's pretty close to the doji gravestone or the shooting star. Both have bearish performances, okay? Bearish tested performance, so we will have to see what goes on there. But you have a bearish candlestick forming on the VIX, but you also technically can just call this a doji candlestick. A doji is just when you have legs on both sides, and you have a small body candle, and that is strictly because, hey, indecision. You don't know what's going on that day, all right? But going over the 4-hour time frame, that is going to give us some clarity. All right, we come over the 4-hour time frame. I pointed this out. You had a wedge formation, bull flag formation, however you want to look at it. It's here. All right, and holy crap, are they trying to prevent it from breaking out? All right, that is what is going on. All right, but let's go over QQQ and SPY. All right, so yesterday's projection, what I said that I was looking for was I was looking for SPY to come up, and I was looking for it to surpass these highs over here in pre-market / right at open, just so we can come up here, make a lower high here on the CCI and form a bearish divergence, and then that would lead to a much rather a larger sell-off than normally would be possible. Right here, you didn't have any form of, I mean, I guess you kind of had a divergence. It's the same exact scenario here. All right, you went higher on the next candlestick, you went down right here on your CCI on that candlestick. But I really did think it looked like you were going to end up coming, like, especially after Netflix earnings. I told you guys, if Netflix had positive earnings, then we likely end up seeing us surpass these highs going into open, and then that forms the bearish divergence. There you go. And yeah, if we rose, I mean, that would have sucked, but at the same time, it wouldn't have scared me because, hey, like, we have clear as day signs that momentum is slowing, guys. This is what we look for. The other scenario was that Netflix missed on earnings, and we end up just seeing this bearish divergence here on SPY and QQQ end up playing out. And I mean, it does look like we, I mean, I'm just saying, guys, what the heck is this? Holy crap, dude. Holy crap. But yeah, I mean, it just looked like, hey, the 1-hour bearish divergence was going to end up playing out. And at the same time, you wouldn't end up forming any divergence here on the 4-hour time frame. You would just end up coming back down and cycling back down to your oversold line over here. All right, so It does look like Netflix did beat, or not look for, like they did beat. All right, they had the subscription growth, and that is ultimately what made their stock price go so high. All right, but it looks like it didn't matter. All right, charts prevailed. All right, now, not gonna say I called the top or anything like that, because I mean, with this style of TA, you can't call specific tops, but what you can have is these warning signs that tell you, okay, like even though, okay, you're making that higher high and people are just trading levels, oh yeah, let's get all bullish after that level. Well, what if you're forming a bearish divergence on your 4-hour time frame? Why would you want to be going long on that? That's what I'm saying. All right, there's the warning signs. We had warning signs, so even if we did have if we did rise, and that was my guess, we would be taking this high out here. I was still going to be just adding to my puts. Now I did actually add to my puts today at open. I added to the October 31st puts because those things are so freaking volatile. I told you guys I was going to be trading those like a trader. All right, I am getting back into the groove of things, taking profits and dot, dot, dot. And yeah, guys, wicked gains just from, I mean, just literally buying them at open. I just figured, okay, guys, it's there. I saw we were rallying up into open. I was like, well, this is not going to hold. This is not going to hold. So I ended up adding over here. All right, and I can show you guys why I knew that wasn't going to hold. And again, it's with that divergence. Anybody who's just looking at levels, I mean, I guess there really wasn't a level to be playing here. You actually, if someone was a level trader, this is actually a very good short right there. I wasn't looking at that, but yeah, no, you had a pretty solid setup there. All I was looking at is you literally had this massive, like when I saw this going, I was like, no way, this doesn't form a bearish divergence. This is setting up perfectly. And yeah, literally perfectly. All right, so I did end up adding up there, and it was strictly off of that. And it ended up working out. But I do want to tell you guys, all right, we are on a bumpy ass roller coaster here. Pardon my French. That, like, honestly, guys, yeah, I'm in it for the swing trade. I do believe we are coming back down to these lows. That was the projection from the weekly analysis. I told you guys we would likely be rallying to start off the week or bouncing to start off the week, and then we would end up selling off by the end of the week and forming either new lows, or we are going to be headed straight for the lows, and we're going to test them. I don't know if we do end up testing lows. That is a steep drop to have over the next couple days, but I will say it does look like we're going straight for them, all right? Or at least we are going to be seeing what happens with our oscillators resetting down there. That is what I am going to be looking for. I don't know if you do end up stopping at lows, but I will say, like, I'm just saying, guys, nothing ended up changing, all right? Like, stuff is really bad, all right? And I just want to, I want to point this out, okay? We have, and you saw that at the beginning of the video, I believe. Come over here, guys. I'm just going to show you how the rate hikes actually work and why anybody who thinks they're going to stop anytime soon doesn't, like, know this, okay? We're going to put this on the line chart. Creds to Jay Bravo. This is 100% from Jay Bravo. I got this like before the bear market even started. And let's just do that. Did we do it? No, it didn't work. Is it already on? I don't even, why is it doing this? Hang on. Why is it doing that? Can we compare it to something else? It's gonna let us do Palantir. Compares to Palantir, but it won't compare to that. Hang on, guys. Bear with me. Why are you doing what you're doing? Literally, why is it doing why, dude? All right, guys. I might not be able to actually. Oh, it's because of that. Oh, I see you now. I see you. Okay. So we go over here. We'll go to a line chart right there, and we will go like that. All right. No percents, no nothing. Just that, guys. Look at how far away we are. All right. I'm just saying, guys, this is rough. It's rough looking. You got a ways to go. I want to point out what really happens. Okay. When does the federal funds rate start going back down? Every single time since 89. Okay. Or yeah, 89 over here. All right. Since 1989, every single time the federal funds rate started to turn down, it's because it hit that line. All right. It hit the 2-year yield. All right, guys. The 2-year yield is pretty much inflation expectations. All right. And look what's going on here. I'm just saying we're nowhere near that. All right. So we are guaranteed going to have to price in higher rates. All right. And I want to point out, like clear as day, guys, you can see right here 30 year, 4.1, 10 year, 4.1, 5 year, 4.3, 2 years, 4.5. Guys, you got like one hell of a yield curve going on. It's been going on for quite some time. If you guys are not new to the channel, then you know, like I called this out like I'm talking like at the beginning of 2022, and it has only gotten worse, guys. So the way a yield curve works is it calls out a recession within the next 12 to 18 months. We started seeing this yield curve pop up at the beginning of 2022. Now we're at the end of 2022. Banks are now calling for a recession at the what is it, the first quarter of 2023. I believe that's what I've been seeing. But either way, if they're now calling for it in 2023, guys, this is like exactly what we called out here on the channel. All right, guys, that is what the yield curve suggests. All right, and by the way, this was before I started making these updates, so you're not gonna find it. All right, this was when I used to make my old videos. All right, which I don't even know what I would make videos on. I really don't. It would just be random tickers, random setups. And then I found my way. I found the indices, and I realized there's literally no reason to ever trade anything else. There really isn't. You learn how to trade the indices, and you're set, guys. All right, so let's go. Now that we finished up with that, let's go back over here. All right, let's take you off a line chart. Let's go back over the 4-hour time frame. All right, and let's look at Mr. VIX. What is Mr. VIX doing? All right, I told you guys before, they're trying hard, all right, to not let this thing explode, all right? VIX is going to explode. And by the way, I just want to bring this up one more time, all right? The 2-year. Oh, why are you doing that? No. Why is it doing U.S. bonds 2-year? All right, I don't know why it wouldn't. Why are you working now? All right, guys. TradingView's trolling me. That's fine. Perfectly fine. All right, guys. But I want to just point this out on the daily time frame. Look at where the US 2-year is. All right. Look what's going on. All right. When this thing goes up, stocks fall. Well, what's going on here? We're not at new lows. We're not at new lows, but I do believe the market is going to realize what is going on within a few days, guys. I mean, I don't know if it's going to perfectly align with our projection and go reach new lows by the end of the week. I have no idea. But what I will say is, why is the stock market not at lows, but this is at like all-time highs here? Are we at all-time highs? Let's actually just look. We're not at all-time highs. But this is something, guys, also like this is just like, this is terrifying to look at, guys. All right. I don't really cover bonds or anything here on this channel, all right, but we can keep this in mind. I've like just kind of had this. I have this huge sector watch list. So if anything ever pops up in the news, I can literally just go on here, and this is pretty much like, you know, all these different things. This was like Henry did this literally a year ago. So this one is new though, and this is how we will keep track of the bonds. All right, I added this just so we can look at the bonds. All right, and I'm just saying, guys, you broke your downtrend here. Like, it's not looking pretty. All right, but what I will say is you come over to the monthly time frame. You have a bearish divergence forming out there. All right, you have the weekly time frame. Again, you have an absolute massive bearish divergence that is formed there. Come over to the daily time frame. Again, you have that divergence here. Maybe rates begin to fall, but then again, you were forming this daily divergence way back here, and you just did not. You just kept running. All right, so you sold off a little, but then you just kept going. The weekly divergence here, you have again just, it's been carving out since you literally were at the bottom. So I don't think there's going to be too much confidence put in these divergences, at least for myself. I will not be doing so. But it is good to know that they're there. All right, guys. So maybe we start falling down here on the US 2-year, which is inflation expectations. That is what the federal funds rate is always going to be tracking. All right, they can say they're in control, they're not in control. All right, they've never been in control, and that's just that. All right, guys, watch for Tesla. I'm gonna bookmark that. Watch for Tesla. I will be watching their earnings call live. All right, and likely you're going to see a move right after market close on Tesla. I don't know which way it's gonna go, but just like Netflix, it's going to be something that moves the market. So it's something that we need to have on our radar. And honestly, if Tesla has any bad outlook, guys, I don't expect it to go well for the stock market. All right. You had Netflix with a positive outlook, and yeah, you saw what happened. So, I mean, we're going to have to see. The earnings coming out recently. I was talking to my friend recently, and he mentioned all the banks. All right. And yeah, good point. All right. The banks are showing that the consumer is strong. Everything's strong. All right. They have, everything's doing good. Okay. But here's the thing. All right. Here's the thing. These are the banks with the wealthiest people. Okay. I know for a fact, like, you need a certain amount of money to even go bank with JP Morgan. Okay. I'm not going to act like I know that figure. You can go look it up online. But we'll just throw out a figure right now. $200,000. You need $200,000 to deposit into their bank account in order for that to happen. That right there is the middle and upper class right there. I mean, I wouldn't call upper class only having $200,000 in a bank account and a savings account. But either way, my point here is that these are the like best people in the economy right now. They are not hurting. These are the people who were already financially off well, all right, and they're not hurting. And then you look at the debt. Okay, go look it up on Google, guys. Just look up the national debt chart. Okay, or not national debt, total U.S. debt. All right, and guys, consumer debt is at an all-time high. All right, no matter what anybody tells you, credit card debt is at an all-time high. Consumer debt is at an all-time high. I don't care what the banks are telling you. I could tell you for a fact, this is not pretty. Okay, like, with this current situation is not pretty. It hasn't been pretty for a while. All right. Those are literally the upper class individuals who bank with these banks. All right. So I like whatever they are saying about the consumer, they don't know the actual consumer. All right. So yes, like, stocks were rallying off it, but I guarantee, or I'm not going to say I guarantee worse earnings are going to come out, because maybe things that haven't shifted bad yet. Maybe we're going to have a good earnings quarter. I have no idea. Maybe that's going to be what kicks off a short squeeze. No idea. All right. But in the meantime, we are going to be sticking to technicals. All right. Just know that earnings likely will be moving the market one way or another overnight. As we see now, okay, you have positive Netflix earnings. You move up on QQQ, up 1.6% after hours, and then boom. All right. You open the morning session, the pre-market session, down 0.5%. All right. So, like, even though earnings will move markets, just realize that, okay, clearly there's power here that is very easily capable of wiping away these earnings gains. All right. So if you have the positive earnings, just realize that, like, hey, we're going to be following the technical analysis. If the technical analysis doesn't suggest you're going up, then, I mean, like, look at us right now. We're sitting up right up here, okay? This rally right here, this short squeeze rally, the same exact short squeeze rally over here, all right? What did it do? It allowed you, like, first of all, you set up that bullish divergence here, but what else did it do? It allowed your oscillators to come all the way up here. Look at where VIX's oscillators now. They took a breather back down to the last point where they rallied at, all right? This rally, this was on Thursday, October 6th. What happened on SPY after October 6th? Oh, what happened? We fell off a cliff. All right, man. By a cliff, I mean like a at a low, a $25 cliff we fell off. All right, guys. So all the oscillators reset. Okay, if you get a wave of negative news coming in like we had over here, everyone was, oh, everything's good, and then boom, the news completely shifted the narrative, and that's exactly what was happening over here. I'm not going to guarantee you're going to see a shift in the news narrative, but it is very likely that you do now see a shift now that your oscillators are back up here, and boom, they're going to drag you back down under here. All right, I don't know if that means new lows. I have no idea, but I will be here each and every day, keeping you guys updated as they come along. Keep your eye on Tesla earnings. That is going to determine after hours price action, and if it's positive, we gap up most likely tomorrow. If it's negative, we don't gap up tomorrow, and we will likely gap down. All right, guys, with that being said, I'll catch you guys in the next update. Peace.